We're doing a little bit of a different schedule today, aren't we? We sure are. We sure are. Let me know if you're in the chat. Anyone? Boom, 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 boom. Alrighty. We are doing a pretty damn good job right now, I'd say. Bomb, bomb. Okay. We are now here. Oh my god, I didn't even say hello to you guys. Hello guys, I'm your boss, Joe Boss. I am locked in right now. I am 100% locked in. Hello, H2O producer. Nice to see you. Man, I gotta tell you that it's been a pretty nutty morning. Let's go to the general chat here. And we can scoot this to the side. Here are the full... I found the official IRNA source for the new trade deal that was announced. Check this out. No agreement is reached on the nuclear issue. Actually, we'll just go right down to the bottom because the bottom has the actual meaningful summary. In the framework of the Memorandum of Understanding, the MOU, a plan has been considered for 90-day negotiations between Iran and the United States, another 90-day period starting from today, during which the two sides will negotiate with each other to resolve 3 issues. The topics discussed will be the continuation of Iran's peaceful nuclear program. And by the way, this is written from an Iranian publication, so they're about to say some other stuff here. The lifting of all unilateral and illegal U.S. sanctions, and the mechanism to compensate for the losses caused to Iran in the imposed war. No other issues will be on the agenda for the negotiations for the next 60 days. That's assuming this deal gets signed. And right now the rumors are that this deal will get signed on Sunday. That's what's been floating around the rumor mill on X this morning. Based on the planning, if the Memorandum of Understanding is signed at the end of the war and success is found in the 60-day negotiations, the final agreement will be implemented in a specific timetable and step by step within the framework of the corresponding steps. All right. So that's the main shebang here. Now there are details here on, for example, the frozen assets, the nuclear negotiations, the blockade, all sorts of stuff. Again, we got a lot of research threads here. If I go back to the general chat, you can see right here, this is a whole picture of all the different research forum threads that I've just been active in the Discord. This is a trade research Discord. It's free to access. Most of you guys have probably found the stream because you're in it and you got a stream ping. But if you guys have any friends, any other traders who would like to get some of this research, or maybe who you know would like to contribute to some of this research, you know, just to be involved in a place where we are focusing on this type of research, then go ahead and send out the WAP link. Tell them to join the free Discord. And I'm thinking, it'd probably be good to maybe get some reviews on the Discord product there on WAP. Because, man, there are some people I know who just have been lurking on this Discord for the last couple of years now. And they rely so heavily on this Outlooks channel. Just all these Outlooks, all these different posts from all these different institutions. Again, these are free, publicly available URLs that take you directly to analysis from these different institutions. And every Friday, I go ahead and I post the ones that I'm able to find. Guess what? Today's Friday. So I've already gone through yesterday some of the outlooks to share. And I'm going to be posting them probably over later today, tomorrow. That's the plan. That is the plan. Yeah, we got European inflation. It came out actually disinflationary. And I made a post about this actually on X. There is a weird thing with the ECB press conference where Lagarde was saying that we are hiking, and I should probably pull up the euro here, right? Lagarde was saying, hey, we need to... And by the way, the ECB meeting, nothing was really going on. But once we got that inflation print, things started to move a little bit. Look. I should close that out real quick. Look, the ECB said one of the major reasons why they decided to hike and why they were expected also to hike. Excuse me, I gotta sneeze. I'm trying to get my sentence out here, but this is like one thing after another that blocks me. I gotta sneeze. I got something else going on. Anyways. So what's going on with the ECB is they said, hey, we're going to... Oh, hello, Ani. Sorry. No, you're not late. I'm just doing a different time for the stream right now. Thank you very much for hopping in. The ECB said that they were concerned about inflation. Most of the inflation, though, comes from... Get this. Obviously, energy. But... Here it is. And I believe there's a graph. Yeah. You guys can see that, right? Yeah, you guys can see that. This is the black line. This black line is energy. Energy. So energy inflation. And it came down a lot in the latest reading. It's reasonable now. Some people have been saying, hey, energy prices have probably peaked. And then immediately out of the woodwork comes a bunch of guys saying, no, of course energy prices haven't peaked yet. Don't you know that all the stuff going on with the Strait of Hormuz is a huge problem? Well, look, there's two things, okay? Two things. It seems like the major problem... The major economy that's having problems right now is mostly Southern Asia and India. Because Japan actually announced literally today, hey, we actually have secured new oil supply. If I go here to the commodities channel in the Trade Research Discord, look at this. Wow, looks like Japan has resolved their oil supply issues. They have begun taking in oil from Alaska, the United States, Canada, and Mexico. And in accepting that new oil, also Venezuela, but in accepting this new oil from mostly North America, Japan says, hey, guess what? We actually might not even need to draw on our oil stockpiles. We're doing really well right now. We're doing so well, in fact, that we feel comfortable putting out a forecast. Guess what that forecast says? It says that right here. By utilizing, hold on, let me read from the top, okay? On top of that, even assuming conservatively that alternative procurement from August onward, so procurement of oil from August, will be limited to 75% of the year's prior average monthly level, meaning that the average amount of oil they're able to import into Japan is about 75% of what the average amount of oil imports that they had month to month in 2025. And then, by utilizing stockpiles, making that assumption, even if we also used stockpiles in that conservative scenario, where we're at 75% procurement of oil, we can extend the previous projection by about 1 year, enabling stable petroleum supply in Japan until the end of March 2028. So, up until 2027, Japan is sitting pretty. Japan's doing all right now. They have shortages in some other places. They have shortages other places that are actually significant. Actually, with I think it's a type of engine machining lubricant thing that they're having problems procuring right now. But energy-wise, it seems like Japan is doing A-okay. Japan is doing A-okay. So, and Japan, I think, had like 70-80% of their oil coming from the Strait of Hormuz. Like, they had a lot of their oil now, so they've procured it elsewhere, which is a huge relief for the Japanese, and also a huge security boon for North America and the West, because now Japan is not dependent on the Middle East, or people who could intercept ships coming from the Middle East to Japan. So that's good. That is good. And now this morning we have the news that Iran and the United States are likely going to make another 60-day negotiation deal to try and get closer to peace. Now, I don't know exactly what's going on in the negotiations. I think most of us don't. There's a small handful of people who actually do understand what's going on. And it's going to be a while till we actually understand, in retrospect, what was going on during the last few months. And whether or not Iran, maybe from this deal, will actually open up the Strait of Hormuz or not. Or even if these deals are acceptable to the Ayatollah, Khamenei. Khamenei actually said not even a few hours ago that he was not happy with some deal. So Trump said, "Oh, we have a deal that will be announced soon," and then Khomeini, the leader of Iran, comes out and says, "What? Essentially, what deal? No, we're not. We're not doing anything. No, we're not." And now we have this memorandum of understanding deal for another 60 days of negotiation. So until there's an established line of communication, essentially with the Ayatollah, with the other leaders of Iran, to actually figure out who is talking to who for what and why, and do they agree, do they not agree. All this confusion and disorganization on the Iranian side really is what's causing the holdup and slowness. I mean, I was listening to a couple of podcasts, a couple of videos, and I heard somewhere that it could take 3 to 5 days. 3 to 5 days for a message from an intermediary country that, like Pakistan, that's helping with the negotiations to try and end this war. It could take 3 to 5 days for that intermediary to actually deliver their message to the Iranians and get a response back. They're like living like it's so like decades and like mid 1900s at best. This is slow. This is too slow. And the fact that they don't have faster ways of communicating these things up and down their chain of command, again, shows the inefficiency, shows the disorganization of the Iranians when trying to make these deals. So there's always room for miscommunication. And I guess we will find out sooner or later how significant that is. But all that said and done, with, I think now, energy prices potentially have peaked, right? I know JP Morgan actually just came out with an article today talking about how they were concerned oil would go to, no, that's Citigroup. They were concerned how oil might go to 150. Guys, CL right now is sitting at 84 on the announcement of this news. I mean, we cracked it down here on Thursday the 11th, and we've just kept going lower. Oil's now at 84. This is a huge, huge deal. The ECB's hiking estimates are that, we'll keep hiking, because we need to watch out for inflation. I mean, the good thing is that they said they're going to take things on a meeting-by-meeting basis, and things are very contingent on geopolitical developments, not just with Iran, but also directly with the United States, because the United States is actually trying to pressure and, there's this thing called, I believe, the Turnberry deal. We have a research thread on that. We just go here into the research forum and type Turnberry. And this is a deal that Trump is essentially forcing on the Europeans. This is kind of in the way. Am I in the way? Yeah, I kind of am. Well, let's actually read this section here. As a result of the Greenland crisis and Trump's threats of a trade war against several EU and NATO members in retaliation for their participation in the Operation Arctic Endurance NATO exercise in Greenland, the approval of the agreement was temporarily suspended. So it's going, for all intents and purposes, this is going through. They're trying to act, the Europeans are actually trying to get this deal through. So this is kind of the bread and butter of what's in this deal. The U.S. is imposing a 15% tariff on almost all EU goods. MFN tariffs, which stand for Most Favored Nation, for unavailable natural resources, aircraft, and generic pharmaceuticals, and capping combined tariffs for different tariff policies at 15% for pharmaceuticals, semiconductors, and labor or lumber, while leaving metals at 50% above quotas. U.S. tariffs. Okay, that's when they go into effect. And then the non-tariff barriers. The U.S. is really, really, really hung up on this part of the trade deal. And then we could go through the history and all that. But what I want is to actually look down. So we've been following this since May 15th, 2026. We can actually listen to this real quick. I think this is like a minute long. Oh. Yeah. Yeah, and then these are some politicians saying we don't want the Turnberry agreement. And then Ireland is taking helm of the EU Council over July 1st, so they're getting briefed on the Turnberry agreement. Oh, and then this is an economic analysis. This is what I wanted to actually bring up. Oh no, the music is like adding talking sounds. All right. The main consequences of this agreement, this Turnberry agreement, will be concentrated in sectors such as automotive, manufacturing industry, and certain agri-food branches, where lower tariff pressures on exports will coexist with an increase in competition in the European market. Recent pressure from the United States on the automotive sector, as well as the possibility of new trade measures through other legal bases in the second half of this year, have convinced Europeans that the risk of escalation remains very real. So the reason why the Europeans are agreeing to this is essentially because if they don't, they could be hit with much harsher tariffs. Specifically in the case of the European manufacturing industry, the outlook is uneven. The automobile sector shows this ambiguity. European exporters will face a 15% tariff instead of a 25% tariff in the United States. That part is good for Europe, but at the cost of greater competition in the European market, because the United States will be able to sell more of their cars to the Europeans going forward. In the field of agriculture, European concessions remain more specific, with significant reductions in certain processed products and tariff quotas in sensitive segments such as milk. Actually, the Indians in New Zealand just did a trade deal, and they had a whole section on milk because New Zealand's largest export is dry powdered whole milk, and India has so much milk. They try and protect themselves too. Yeah, and a lot of people in New Zealand are not happy with that deal. However, I believe ultimately it will be a good deal. And net, it was a fairly bipartisan deal for New Zealand. Now, in the second half of this year, that deal would get passed, but that's not necessarily what we're talking about here. So, that Turnberry deal, if it actually went through, could be a point of growth in Europe. And also, considering China is trying to sell more product into the EU, they actually don't want the US to compete. So I would 100% bet that there are Chinese lobbyists in Europe trying to do whatever they can to attack this Turnberry Agreement, so that then the United States doesn't have as much access as they otherwise would. I just wouldn't be surprised if that actually was the case. Now, let's go to the charts and see how things have been reacting so far. Because now we're having lower oil prices. We're probably going to end up with much lower inflation if oil stays below 90 and continues grinding lower over the next 60 days. Because this chart here looks pretty good. And even when you back it up to the beginning of June, that looks pretty good. And even when you back it up all the way here to May, that's pretty good. So you could say since the middle of May, the trend has been very consistent. Very consistently down. Yeah, we can even include a bit more data here. And let's cut this off actually to there we go. Just keep this data here out of sample. Okay. So we'll probably trade in, I think, the 80 handle for the week ahead on oil. That would be my expectation. We'll trade in the 80 handle for oil. Let's go ahead and throw on some indicators here. My range probabilities. Okay, so probably if we go back up probably to about 87, 88. I wouldn't expect us to go too much lower at this point. We went down pretty freaking fast because of all this news. But if we do go lower, I would imagine 81. 81, we'd probably find some support around 81 would be my expectation. So net, I have a sideways expectation. So let's put ourselves between 81 and 88. So something like this next week. And we can zoom in and make that real big. Now we can turn off that. And you can kind of see this range. Looking good. So let's check out oil. I had more bullish expectations for oil. You can kind of see what I was expecting with this regression. But man, with inflation coming down, the expectations of that and the deal getting done, I think I think gold is going to, and oil is going to get hit on the harder side. I don't know when we'll break 40,000 or 4,000, not 40, Warhammer 40K, right? I don't know when we'll break 4,000, but I absolutely would expect to go below it sometime this year, maybe in July. We'll end up going below it. What does the seasonal expectations currently show us? If we go here to a daily chart, and also we can hide the extension now. Wow, there's like nothing there. That's kind of crazy. Okay. Yeah, this is why we have the table open. So the seasonal moves are a bit more bullish these next couple days, but then the latter half of June... The latter half of June is not so bullish. Latter half of June, you can see some red here. That's not good. So that's about here going into the latter half. So I would expect us to essentially also trade sideways in this 200 point range, 300 point range between 4,000 and 4,300. Yeah, just to the end of the month, like that. So kind of in this area here, going up and down, up and down. I don't expect us to go super far past. Yeah, I don't expect us to go super far past that. Yeah, if you look at this for next week, you have to go past that 75th percentile. And because look at what happens when you go past it. Now, inverse at that 75th percentile is the 25th percentile on the downside, because these are distributions of where tops and bottoms usually occur. And look at that. Once you go past this threshold, you enter the tail and you just crash. This is what you call a falling knife. And this is the area crossing this spot right around here, or even more conservatively here. That's where the falling knife begins. That's how that goes. It's not that complicated. But you need an indicator to actually point out those lines in the sand, right? Okay. Now, what next? So we did oil, we did gold. Oh, Bitcoin's probably not doing so well. Bitcoin has recovered, has been doing a bit better. Oh, because energy prices came down. Right. Look, Bitcoin's not doing so great as of recently, right? Like, I just set up this range and it did nothing, right? It immediately went down to here. But assuming inflation continues to hold and go lower from here, and energy prices continue to go lower from here, it means that real wages will also go up, which, you know, buying power will go up. There will probably be another ride. So I wouldn't be super surprised if we, after June, we started going higher on Bitcoin. So June, I'm still gonna expect sideways. I'll just move this down here. I'll keep it simple. But after June, I'd expect something along these lines. And then we can save as template green, like that. And then we can add a timestamp. So that's when I'd start to expect us to go back up. Maybe over the month, maybe over the next couple of months. I would expect us to start moving up-ish. Again, assuming the stuff of around starts to roll over and energy prices continue to fall. Because if energy prices and inflation fall at the same time, Look, there's going to be a lot of people that say, oh, but Bitcoin should sell off at that time because Bitcoin's a hedge against fiat money. Like, just look, I get it. That was one of like the fundamental principal philosophical reasons for why Satoshi Nakamoto built Bitcoin. I mean, the very first block, I think it was the headline of another bailout in the UK that was put into the blockchain by Satoshi, right? Like, I get it. I absolutely get it. But Bitcoin has its own underlying economic process that is pretty devoid of philosophy. I mean, you had to use philosophy to get to the structure of it, but the structure and the mechanism of Bitcoin itself is pretty amoral and apolitical. It doesn't really care about these things that we're talking about. What it cares about is how many miners are there, how powerful is the hash rate of all the miners combined, what's the difficulty rate, does it need to go higher, does it need to go lower, what's the current supply, what's the halving, where are we in the halving cycle, all that stuff. And right now we just had some massive sell-offs because some big guys exited because they were not having a very good time, thinking, wow, there's a huge opportunity cost for us to hold on to Bitcoin right now, especially if the Strait of Hormuz doesn't reopen and inflation goes higher. We're going to have problems here because we're having growth issues. See, when the world is growing and doing well, Bitcoin will do well, generally speaking. For all intents and purposes, Bitcoin doesn't fit neatly into a risk-on, risk-off asset. It doesn't. Like, for example, you know how I did that whole stream on the dollar smile theory? How it went something a little along the lines of this, where there were three regimes. If I could just get the drawing. Where's the brush? There it is. So you have a smile. You have the right side of the smile, the left side of the smile. Over here, this is when the US dollar does really, really well because the rest of the world is going to shit. Over here is when the US dollar is doing really, really well because the United States is performing the best out of all the rest of the countries, or second or third best out of all the rest of the countries. And everyone's doing generally really well, but the US is doing the best. And right here in the middle is when the US dollar is doing the worst and actually going down in value relative to other foreign exchange pairs or currencies, because the United States is not growing or doing as well as the rest of the world. It has an idiosyncratic risk to the United States that's causing it to slow down. And most of the time that has to do with fiscal policy, with government policy, with military spending, with credit ratings, that sort of stuff. Or general economic performance, but typically the United States is performing really, really well across pretty much every metric compared to other countries. So there are a few times in history when the United States isn't in that category, when it's not doing really well, it's struggling economically, but other countries in the world are A, not affected, and B, doing just fine or thriving, right? And it's in that scenario where you're in the gutter, you're in the trough, the bottom of the smile. This is when the US dollar goes down in value. Dollar goes up in value over here because the US is king of the world. And over here, because the world is crashing around it and everyone's trying to hold on to the United States and the dollar as tightly as they can to preserve as much value as possible, right? So that's how the dollar smile works. What we need is like a dollar smile theory for Bitcoin. And I don't know how to approach it. You see how effortlessly it was for me to explain that dollar smile theory? But when it comes to Bitcoin, I don't know how to describe it. I need to know the regimes, right? Because when the world is doing really well, when the world is growing, we know that Bitcoin is doing well. So when growth is up, Bitcoin is doing well. And when growth of the world is down, Bitcoin is like stagnant or down. And, you know, there are a handful of times where people are concerned about inflation, right? And we can go back in the chart and look at gold. And you can see throughout the second half of 2025, man, that was gold's rise, right? Well, now let's check out Bitcoin. Guys, I thought Bitcoin went up when inflation went up. Clearly, Bitcoin was not doing so well here, right? So, it's not about inflation. And the reason why is very simple for this kind of growth dynamic that I have roughly set out here. So when growth is up, Bitcoin's doing well. When growth is down, Bitcoin's doing okay or performing worse. But even if we are about to go into a really strong growth cycle now, there's something different about the upcoming growth cycle compared to prior ones, and that is the competition for access to hardware, to computer chips that all the Bitcoin miners need in order to stay competitive with other Bitcoin miners. So if you have a hard time as a miner getting access to energy infrastructure like generators, or being able to actually work with utility companies to get power lines set up, or contractors to put those things up, or people to actually run your infrastructure at your warehouses, right? All these things are being attacked by AI recruiters and AI company salesmen trying to consume as much of this as possible. And it is damaging the growth of miners, of a lot of miners, from being able to mine profitably. Now, if inflation goes down and real buying power goes up, and oil prices come down and energy prices come down, that actually will help Bitcoin miners quite a bit. And that will stop Bitcoin miners from selling. Because guess what? When all those things I just mentioned, of all these AI companies coming in and trying to go after essentially all the infrastructure related components, again, energy, hardware for computers, ASICs, when they go after all these different components, all these different things that you need to have a successful growing mining operation, the one saving grace you have is you have the Bitcoin on hand in your inventory that you can sell to keep the lights on, to pay off the debt and the loans that you took to build out the mining warehouse, right? To pay people so then they can eat and live and pay their rent, right? So with that in mind, what ends up happening when energy prices go down and real buying power goes up for these miners is they can sell less Bitcoin. So we want energy prices to go lower. We want disinflation. We want the Fed to stay on hold, if not start cutting rates. We want these things to happen because actually it would set us up, set up investors, set up miners to feel more confident that we could start going into the next Bitcoin bull cycle, maybe in late Q3, potentially Q4 of this year. Again, depends on how far down energy prices go, but I would imagine if a lot of these things started to be resolved, again, disinflation, you get rate cuts, and energy prices go back, oil goes back to like $70 or $60 in 2027, then we'll end up with probably, I think, another bullish year for Bitcoin in 2027. Now, we got a long ways to go till then, right? We're in June. We're just midway through June. So, we still have another 5.5 months, call it, until we're just in 2027. So there's still a lot to look at and a lot of uncertainty that can happen between now and then. So it's important to be watching developments. I encourage you guys to join me in my trade research Discord. Again, that's free. And the link to it's in the WAP link in the description. And we can go over these things and watch the news. Watch for these new developments. And see if these stories change over time. Now let's go ahead and check out NQ. How are things doing? I did set a more bearish expectation here. But looks like we're holding things here relatively range bound. And I was not really expecting that. But now that we have the SpaceX IPO coming out, and also now that we have this disinflation, and also still the rest of the world is slowing down. We just got GDP out of the UK and GDP out of Europe. And it's coming down in both places. And if you remember our dollar smile theory, when growth is worse in other places in the world, in the United States, the United States has growth that's doing really, really well. It's accelerating. Well, that makes more people want to buy the US because the US is doing the best out of everybody. So that makes this virtuous cycle of more US dollars getting bought. So I would imagine that story about growth for these other countries is not going to be changing anytime soon. But we sure as hell hope it does change for Japan, that Japan is able to grow really, really fast. Because if Japan doesn't start growing much more significantly, they are going to have like $170, $180 yen. They're going to have a hard time. It's like inevitable that will happen. So we really got to hope for all of our friends and colleagues and loved ones in Japan that, they really bust ass and get that GDP up, because all those FX hedge fund managers are going to try and screw over their currency if they don't. We'll see how things go. And especially kind of what the mood is during the negotiations during the next set of spring wage negotiations for what 2027 would look like, especially if energy prices go way, way down. Yeah, we'll see. One thing that probably could help Japan growth-wise is, I did see this as a theory, but it's essentially military spending, because it's expected that Japan will rebuild their military. One thing that the Japanese can do is spend loads of money on rebuilding their military and essentially artificially grow their GDP that way. By just spending a lot on military. So yeah, I would not be surprised if we started going to like 123 or something. Let's check out real quick our ranges. And our timing dots real quick. Oof. Yeah, it's something like that. That would not be great. I'd prefer not to actually have that happen for our friends over in Japan. Yikes. But even the probability weight pivots there. Yeah. I'd be careful on the dollar yen side. I'd be careful. And we can delete that for now. Let's see here. S&P. Is the low in for S&P? Where are we likely to close? Probably sideways or back above central pivot. I would argue we just do a more nominal close into the end of the month here. Nothing crazy. But maybe even a bit lower, right? Yeah, something along these lines here. Just a recovery. Let's get back above 500 and then trade in the 7,500 range, right? That'd be more or less my expectation. How to do it day by day? Well, now that's a different story. Let's see. Yeah, we'll probably close like 100 points higher next week. By the end of the week, we'll probably end 100 points higher. Really wouldn't be too surprised there. Has SpaceX dropped any data? No. No, it has not. Let's see here. I think it is time for me to end the stream. I am quite relaxed. I'm quite looking forward to the rest of my day. And very, very happy for all you guys who stuck around and watched. Again, I'll be in the Discord, keeping up to date on a bunch of stuff. Man, there's a lot of things going on in the world. And sometimes it's tough to see how those things impact your trades, and genuinely speaking, sometimes they really don't. But that's why you want to stay on top of the research. And that's why you want to have friends and people that you know who are on top of the research too, where they're sharing it freely. And then everything becomes a lot easier. When the more you know about the world, Easier trading can get. Thank you guys very much for watching. I've been your boss, Joe Boss, and I will see you guys in a bit.